Hey, this is Mike Swanson of Wall Street Window. Well, famed stock market investor, former hedge fund manager Michael Burry has done it again. He's issued two tweets in the past couple hours about his updated views on the markets. Now, been made famous by the movie Big Short, uh, which details his story. He's one of several characters in it, but he bet against the mortgage market going into the 2008 crash and made over $1 billion. And really, over 12 months ago, he began to issue warnings about the state of the stock market, suggesting that it was a bubble and like 2000, like 2008, and there would be a significant decline. Well, in June, it turned out that as the decline started to play out, he actually went long several big cap technology stocks. But then filings in August showed that he sold almost everything he owns, went completely to cash before before this decline in the market began, before the August peak. So he timed things perfectly, and now he's issuing new market statements. I mean, his track record makes it interesting to see what he says. And he did it on Twitter. Two of them. First is this one. He says, crypto crash, check. Meme crash, check. SPAC crash, check. Inflation, check. 2000 check, 2000 check, 2008 check, 2022 check. Well, what does this mean? Well, crypto meme SPAC, those are the most speculative elements of the financial markets, and they've all crashed. Um, crypto is down significantly. SPACs and meme stocks, the SPACs really never came back. They crashed, never came back. Meme stocks crashed, but then they got new life in them in July and August. When the stock market rallied, a lot of individual traders began to jump into meme stocks again. He made tweets mocking that situation. And that's when it turned out that he'd gone to cash. And now those stocks are all crashing too, which was a sign, frankly, in August that the rally was going to end, and it did. And we've been down ever since, over the past 3 weeks, that is. But he is suggesting that these three mass speculative assets and the fact that they crashed is a warning sign, because similar things happened in 2000 and 2008. And therefore, he's saying this year, 2022, is similar to those 2 years. Now, he has a more specific statement he made after issuing that one. No, we have not hit bottom yet. Watch for failures, then look for the bottom. Two SPAC ETFs failing is not near enough. Well, what do we make of these statements? What can we learn from them? Because actually, this is real helpful what he's talking about here. And if you're new to the markets, or just has started trading since 2020, you may not understand exactly what he's talking about. But I've been trading since the late 90s. So I saw what happened in 2000. I saw what happened in 2008 during those two bear market cycles. And I know what he means by failures. So let's take the 2000 and 2003 bear market, because actually I think that in some ways is more instructive to what's happening now. I really don't think we're heading for a banking crash, like what happened in 2008. But in 2000, there was a mania in internet stocks that took place during that year. That is very similar to the meme stocks, very similar to crypto. At the time, these were companies that were making, many of them making zero profits. The internet was new to people back then. They'd only been online for a few years. and the internet browser, as we're looking at now, was even newer to people. And people were hyping up the internet in the stock market, saying it's the future, it's the future, it's going to revolutionize the entire world, it's going to make everyone rich that gets involved in it. A lot of that came true, but it was so hyped up that the hype did not come true. And they were telling people to buy stocks, not based on their earnings, but on the very fact that they have lots of page views. And stocks are reaching ridiculous valuations. And then they crashed in 2000. The whole bubble burst. And then a lot of these stocks went to zero. Many of the companies went bankrupt. That was the giant speculative failure that took place, but there were financial failures too. Broadcom failed. There are lots of these, or went near bankruptcy. Enron failed. WorldCom failed spectacularly. And the news of those two stocks dominated the financial media in the year 2002, 2 years after the top in the market. Those were the big failures that people were talking about. The point is, and it happened towards the end of that bear market cycle. The WorldCom failure was, I think, started about 90 days before the July stock market bottom in the NASDAQ. The market had been falling for over 2 years, and towards the end of that decline is when the failures, dominated the media for a period of time. Of course, 2008, the stock market actually topped in the fall of 2007 and fell for an entire year before the failures in the banking system became self-evident to everybody and dominated the financial media completely, dominated the news cycle completely. It was a year declines before that happened. So the point of this is that bear markets, and we're in a bear market, and I'll show you why I say that. This is just not a prediction. It's not a claim, because you see so many people making claims and predictions, and they never explain what they're basing it on. And it's more important to understand what people are basing their statements on than just to take them at face value. That's why so many people get fooled by misleading gurus. It's the details that are important, and I'm going to share that with you in a few moments. But the key takeaway here is that in 2000 and in 2008, which actually began in 2007, the bear market, but the crash was in the fall of 2008. Again, remember this: the declines took place over 2 years in the 2000 example, over 1 year in the 2007, 2008 example, before the failures came. And it was time to start to look for a bottom. So we haven't seen the failures yet during this bear market, but they will come and they will surprise people. I don't really know what they're going to be, but there will be, traders that fail, hedge funds that spectacularly blow up, companies that go bankrupt. The failures will come. The failures are not here. And it's going to be more than just SPAC ETFs failing, which are just a very small part of the trading world. It's not going to be just a crypto coin crash. Who cares about crypto coins? It's only a small, cult following in them. It's going to be failures that really dominate the news cycle and may even make people worry about what's really going on. It could be the junk bond market. It could be some individual companies heavily indebted in junk bonds that fail, but something will happen. But people, his two statements are getting the attention today of the financial media. Here is a story on Markets Insider talking about it. And it's merely suggesting that the implications of what he's saying is that we're halfway through the bear market and we're in a crash situation, according to the headline here. I don't think that's really correct. I don't think the market is crashing as we're speaking. And in fact, I don't really think it's going to crash this fall. I do think we will see selling most likely towards the end of this bear market decline, which began in New Year's, and the end will probably be next year, which some people will think is like a crash. But that's what happened in 2002 when the Enron, the WorldCom news blew open. The stock market fell for almost 8 weeks straight, and it felt like it was falling endlessly. I mean, people have forgotten all about that, but it is what happened. But look, this is Michael Burry. This is not what most traders in the market are doing. The individual investor is still fully engaged in the meme stocks. They are desperate to gamble and play it up. This is Fidelity. And when you look at the order flows by Fidelity customers today, the stock market is up, and after it's fallen almost 2 weeks in a row nonstop, anytime the market is up on a day, that people pile into meme stocks to try to gamble it up and play. And that's something that will stop by the time we're at the end of the real bear market that's happening. So it's constructive to look at those last two cycles. And I've circled them on this chart and how they played out. That 2000 to 2002 bear market cycle, this is the S&P 500, was not a sudden crash. It was a grind down that took place over like 2 years. There were plunges during the decline and counter trend rallies up, but it took 2 full years. The 2007 situation and 2008 situation was a grind down, much like we're seeing now, that ended up turning into a crash about a year after it started. That would, if the same thing happened now, that would mean the stock market would crash in the first half of next year and just grind lower from now until then, as it's been doing since New Year's. I'm not sure if that's going to happen, but you can see how we are trending down. And the way I define a bear market is very simple. It is simply a market in which the average, the stock you're following, the sector you're following for that matter, but whatever it is trading below its 150-day and 200-day moving average, which has been happening now since around New Year's. In a bull market, the opposite happens. You trade above those moving averages, and they act as key long-term support areas where you can buy on dips, typically, which will happen once a year, sometimes twice. In a bear market, though, they act as resistance. And what happened on the last rally is very instructive when you look at it. The S&P 500 rallied up to the green line, the 200-day moving average, and the rally stalled out. It acted as resistance, confirming that the bear trend is intact. That's the trend that we're in. Now, Burry is suggesting we're maybe halfway through it. He's making the warning signs that people need to check off, but few people have taken any action or changed what they're investing in, how they're positioned in these markets. And that's why we're still only halfway through, or at least, not towards the end. So that's what Burry had to say today with his tweets. It's always interesting to see what he has to say. Look, I do videos about all sorts of topics. I do videos about the financial markets like this one, the news, politics, the economy, and real estate. If you want more videos like this from me, hit like. And if you are new to me on YouTube, hit the subscribe button, hit the bell next to it, then YouTube will send you an alert as soon as my next video is up and for you to watch. I'll be talking.